So if we just take a look at the top, we see 0 for 18. So what does that mean? That means that there's no aggressive sellers at this price point. There's only aggressive buyers, okay? And then we see the market breaking lower. So just from an order flow perspective, what's going on is we see these aggressive buyers failing to drive price higher, driving price above this key level, right? This gray box over here, which was actually this gray box over here. So 15-minute fair value gap. So inside of the 15-minute fair value gap, we see aggressive buyers failing. Now, what does this final box over here mean, right? So this was kind of the third retest. So if you just take a look here, we had 1 retest, 2 retest, and then 3 retests before we headed lower. Now in each of these retests, you could have entered or you could have sized up. So we're focusing on the last retest, and we're going to kind of combine this with ICT concepts. So what does this mean? What does 0 for 126 mean? So that's the number right at the top. So 0 again is on the left hand side. That's the aggressive sellers, right? 126 is the aggressive buyers. And so what you need to know from this when you're reading footprint charts is that here there's a ton of aggressive buyers, way more aggressive buyers than there are aggressive sellers. And so when you see that and you see the market breaking below, what that means, and then this price action here is this price action here. So this very, very big red candle is this candle over here. But you need to know what was going on here upon the third retest. So 0 for 126 represents the fact that aggressive buyers have failed to break above this level. So when you're trading anything, be it a breaker, an I fair value gap, a fair value gap, a supply zone, a resistance, an OTE, even an EMA crossover, right? This could work for almost anything. If you understood that there was a 0 for 126, this would confirm your entries.